Kospi trading around 20 points higher. Shanghai also just about managing to hold in the green.
The street is going to focus on liquidity more than rates in this policy.
The 20-day moving average is the resistance, where that number is 46,179.
It's made a fresh all-time high. It's breached that 20 DMA. It's also gone ahead and, in fact, conquered that IPO price.
That there can be a slight dovish tone in some fashion in the policy.
Gold loan share is down to 51.4% when compared to 58.4% in the same quarter last year.
The entire PSU pack is looking pretty good this morning.
Most market participants expect no change.
The policy rate unchanged at 6.5%.
What really stands out to me this month is that large caps are finally getting money and getting decent money.
It is not a case of where there was a regulatory deficiency or there was a regulatory correction required. It's an issue of compliance.
Okay, I think we finally have the answer to the question that we were asking yesterday, which is what does the market want to do? Because it was unchanged, no pace, no direction, but we've got both today, pace and direction, but unfortunately on the way down. You're with us here on Closing Bell. This is the last hour. We're coming to you from CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios, and Nigel is here with us from the newsroom floor. Nigel, hi, afternoon. Surabhi, Rima, hi. And it's down. It's red and it's deep down. Let me just quickly run you through a few points before we kind of get on with it. I think we're at the day's lowest point now, aren't we? And it's we've kind of broken through some of these levels, etc., both on the Nifty and the Nifty Bank, it's largely a disappointment after the Reserve Bank of India, because everyone said it's a status quo. It's going to be a status quo policy, but I think many were expecting that maybe because the liquidity is tight, bankers have been telling us liquidity is tight, the RBI will do something. But the other point is this, apart from liquidity, the RBI has in a way hinted at the likelihood of no rate cuts in FY25 until the 4% inflation is reached. And that's, I think, a little bit of a heartbreaker as well from a stock market near-term kind of view. The support for the Nifty comes in at 21,686, the level which we put out in the morning as well. And as compared to 9 in the morning, as we start this edition of Closing at 2:30, we are closer to it. So that's a 20-day moving average. And for the Nifty Bank, I mean, it flummoxed us yesterday when we had a move higher and we closed positive. But as you can see, the direction is has been the weaker of the two indices. And it looks like, in all likelihood, as we've been saying, a retest to the low, which is 44,429, is likely. Likely is all we can say, because the markets typically over the last 5-6 days has given us large moves, and then on day 2 there has been no follow-up. So follow-up is what we need for a more firmer kind of direction in the very near term. Rima.
Hi, so banks are down. The Nifty Banking Index is down more than 500 points. The Nifty FMCG Index is down over 2%. And if you look at the large cap losers, the top 3 are the FMCG consumer names. So Britannia down 4.5%, ITC, Nestle following. So, consumption names are deep in the red today. So that's a pocket of weakness. Other than that, autos too on the back foot. So the Nifty Auto Index is a gain of about, a cut of about 1.3%. The Nifty, at least so far, has been holding 21,700, but the level to watch on the way down will be the 20-day moving average, and that's at 21,686. So we are close to that level, but we haven't breached it so far. On the gaining side, it's State Bank of India which stands out today. SBI is up nearly 4.5%. And Surabhi, the mid-cap index continues with its outperformance. It's in the green right now, but the advanced decline ratio is firmly in favor of the losing side. So pull up the advanced decline ratio. We've got about 870 stocks advancing for 1350 stocks declining. So the gap between the two is there.
No, absolutely. And you don't have, we had almost gotten used to talking about this PSU rally on a daily basis. You don't have that. In fact, there is some cool off happening, particularly on the PSU bank side of things. In fact, just look at the bank Nifty itself. It's in a 550 point decline right now. It's still some distance away from its recent low. I mean, the end Jan low that the Nifty Bank made was around just below 44,900. So we're still some time away from that. But this index has broken out a lot of the levels. It's now trading below the 100-day moving average. Obviously, 20 is a long haul now because that's above 46,000. So the problem with banks continues. But it is not only bank, as Rima, you pointed out, because a lot of other pockets of the market. ITC, for instance, there was news from its key shareholder, BAT, British American Tobacco, talking about perhaps lightening some positions, and that stock's not stopped falling ever since. Even on the mid-cap side of things, LIC stands out. I mean, it's still managing plenty of traction on a day like today, 6-7% higher. BPCL, by the way, is behaving as if it's in an alternate market, a market of its own, 4-5% higher over there. So you do have some gainers, but overall, you'd have to say the market is fairly cautious. And Nigel, we're in the second wave down, right? Because we're making fresh lows as we speak. We had the first wave around 11 o'clock. This is the second wave down. Let's see where it goes.
Well, that's right. So it'll be a couple of points. The LIC, that was the stock I had mentioned earlier today. That's going to be the stock of the day. I'm glad it's played out that way. It has valuations on its side. There's been delivery-based buying out there. And when the Prime Minister talks about a stock, you better take note of it. So that one's the big outperformer today. But as you all were going through those charts, all three of you all, and we're talking about the mid-cap index doing a relative outperformance, take a look at what's happened. It was up close to 120, 130 points just, I think, 5 minutes or so ago. The mid-cap index has almost moved into the red. So there's a fair bit of selling that we have seen. And pull up the advanced decline ratio as well. The declining side is gaining traction now. So you pull up those crisscross lines. Now you have only around 800 stocks that are advancing. That number was more than 1,500 just a couple of hours or so ago. So you pull that line up, you'll see, yeah, that's evident for you on the screen. Now they're moving a little bit away from each other. How do you trade the index, though? We're at a very, very crucial mark. Remember the 21,650 odd. That's an important mark you would like the Nifty to defend on a closing basis. And in the next 60 minutes or so, you'll have the weekly contract that expires. Ashish Kayal joins us to help us out with how is he seeing the headline index pan out. Hi, Ashish. Well, a fairly disappointing session, right? First of all, investors didn't like what, they thought that maybe the Reserve Bank of India governor sounded a little bit more hawkish than expectations. And this news coming in on ITC that could potentially be a large seller in the market. That's what's further pressurized the markets. How would you look at the Nifty from here on? And more importantly, the Nifty Bank, which has been underperforming.
Hi, afternoon to you and the viewers. If you look at Nifty, I think there has been selling pressure after the policy for sure. And we can clearly see the index has been feeling constantly around that 22,000 mark, which we discussed the earlier day also. It's not managing to sustain about 22,050 and has been feeling again and again over there. And now it is breaking below the day's low. So it's forming a very clear lower high, lower low formation. And that's not a very positive sign. So I think the overall pressure is going to be there on index. And we can see the index heavyweight is also putting out the pressure there. So I'm expecting Nifty to move towards the level of 21,620 on the downside in short term. And on the upside, 21,840 is going to be a major hurdle. It's not going to cross 21,840. It looks like that. As far as Bank Nifty is concerned, this has been a laggard for not only today, but since many days, where we see Nifty has retraced more than 61.8% on the upside over past few days. But Bank Nifty has not done that. And Bank Nifty is again giving a strong breakdown from the 46,000 mark. Today, Bank Nifty was around 46,130 high, and now it's around 45,230. So nearly 900 points sell-off we are already seeing on Bank Nifty, and there is no bounce back as of now. So looking at both the indices, I think there will be pressure over short term, and we can expect Bank Nifty to move lower, which can lead on the downside towards the level of 44,760.
44,760 on the Nifty Bank is quite likely. In fact, all the NBFCs are also weak in trade. So Muthoot Finance, Manappuram, Canfin Homes, Shriram Finance, in the frontline pack, Bajaj Finserv Finance. These are stocks which are down anywhere between 3 to 5% on the way down. Ashish, what would your stock recommendations be?
I would like to pick up stocks that are going independent to the overall index. And one of those stocks can be HAL. We can clearly see that it's trading near the day's high. And despite of the selling that we are seeing broader markets, this stock is not budging on the downside. So the overall trend for HAL is positive. We can expect the stock to move towards the level of around 3,450 on the upside. And one can maintain a stop loss of around 2,970 in this stock. And the next stock pick is going to be on Jindal SAW. We saw it breaking above the double top formation. It's breaking out from there. So there is a good positive traction that we can see in this stock. I think this stock can be headed towards the level of around 570 from here. And one can maintain a stop loss of 518 on this stock as of now.
Okay. All right, Ashish, thank you very much for the trading calls. We'll come back to you in a bit and see how things go. We have Devin Choksi, MD at DR Choksi FinServe, with us on this leg of the show. Devin, thank you very much. Good afternoon. Good to have you on. So I guess the market set itself up for a bit of a disappointment, right? Because there was almost a conviction that the RBI will hint at lighter or easier liquidity conditions in the next policy. RBI didn't play ball, and therefore we have what we have on the screen. Just come in on financials overall as Universe, because this underperformance is really sort of, it's been going on for a long time. How are you looking at things, not just large banks, but even NBFCs, and what would your advice be here?
Yeah, good afternoon, Surbi. Well, I think the challenge is on the front of, the managing and protecting the net interest margin. As we gather from talks, with various NBFCs, including the banks, we find that their cost of funds basically is going up because there is a rush towards acquiring higher amount of deposits and get to at a higher cost. Given the condition in the economy, wherein on one side the borrower is asking for higher amount of lending, and on the other side, the banking fixed deposits is finding its way into some of the other investment products, the financial instruments. As a result of which, the real challenge for some of the banks is that to corner the deposit. And those banks which are having the lower CASA ratio, they are most vulnerable in this kind of a situation as we see. That is one of the point which is coming up today, that the skepticism is on the ground at this point of time about banks maintaining the NIM, and probably as a result of it, their growth in the business in subsequent quarters. I think we are likely to see this situation getting played out in the end of this quarter, when most of the expansion activity in the infrastructure side is going to deploy funds, etc. At the same time, the advanced calculated payment, etc., which is also going to go out of the pocket of the taxpayer, which is again, going to create a situation of some amount of liquidity tightening in the situation. And that is affecting the NBFCs and the banks at this point of time. Maybe it's a temporary move for a quarter or two at the best. And probably things could play out well, both on the margin front as well as lower cost of funds eventually.
Okay, all right, Devin, stay with us. The other big kind of story which is playing out right now, of course, is the entire Paytm saga, right? And we were talking about this yesterday. The focus was, of course, on the policy, etc., but also on what the governor and the RBI would say as far as the Paytm story is concerned, the restrictions that the RBI has imposed there. Let's do one thing. Let's first go across to Ritu, who'll put the commentary on Paytm. And of course, the RBI does not sort of talk about individual situations, but they did talk about how they deal with these kind of things.
Yeah.
So let's just put that into context, and we'll play out some sound bites of RBI officials. Ritu, over to you.
Well, Prashant, this is the very first time that you have the RBI publicly addressing the Paytm matter. And while the governor did give this caveat that RBI does not comment on specific companies, these are general observations for all regulated entities, and that includes Paytm. Now, what the governor said is a summary in 7 points, starting with the fact that RBI supervision has deepened, its methods have improved over the last few years, and that all emphasis is placed on a bilateral or two-way engagement between the regulator and the regulated entity to nudge them to comply with regulatory directions. And it is only after giving them sufficient time, to comply, and if they fail to see any action being taken by the regulated entity despite these nudges, is when RBI chooses to act to place any supervisory or business restrictions. Very importantly, about the market speculating, what kind of action would have forced RBI to place such restrictions? RBI says that restrictions imposed by the regulator are always proportionate to the gravity of the situation, which should give you some hint as to how large the concerns of the regulator could have been for them to virtually halt all banking operations of Paytm. The governor also said that being a responsible regulator, being a responsible supervisor, all their interests, all their actions are ultimately to protect the depositors' interest and financial stability. And because there's been some, misunderstanding, some clarifications required by the public on what happens to Paytm here on and so forth, RBI is going to issue a very detailed FAQ in the coming few days to address all of these concerns. Through the course of the press conference, the deputy governor also addressed his, and he said that, ultimately, we gave them a lot of time, and it's only after that that the action was taken. And the governor alluded to the fact that it is not just KYC. There were very many concerns which led them to taking this action, clearly, signifying the gravity of the concerns the regulator had, how much time they gave to the entity to rectify the situation. And it's only after that that these restrictions have been placed, giving no indication again whatsoever if these restrictions will be lifted.
All right, Ritu, thanks very much for that. Listen to some key comments coming in from the Reserve Bank of India governor. We spoke a little while back. Listen.
Now, first is that over the last few years, as all of you are aware, we have significantly deepened our supervisory systems, approach and methods. Number two, our emphasis is always on, as the Deputy Governor has pointed out, our emphasis is always on bilateral engagement with the regulated entity. And in that engagement, we give focus on, and we are completely focused on, nudging the regulated entity to take corrective action. Let me rephrase it. For you to make note, our emphasis is always on bilateral engagement with the regulated entities, with focus on nudging them for corrective action. And sufficient time is given for undertaking such corrective action. The third point, when such constructive engagement which we undertake, when that does not work, so when such constructive engagement does not work, or when the regulated entity does not take effective action, we go for imposing supervisory or business restrictions. Number four, such restrictions which we impose are always proportionate to the gravity of the situation. Please take note that such restrictions are proportionate to the gravity of the situation. Number five, all our actions, being a responsible regulator, being a responsible supervisor, all our actions are in the best interest of systemic stability and protection of depositors or customers' interest. These aspects cannot be compromised. Individual entities should be mindful of these aspects for their long-term success. Number six, over the last few days, we have received a lot of queries, clarifications from various quarters, including, members of the public. You have raised a few questions today. So we have noted all these questions and clarifications which have been sought from us. And based on that, we will be issuing a FAQ sometime next week. So that should address all these questions and clarifications which are being raised by you and which have been raised in the public domain and raised bilaterally with us by from various quarters. Number seven, finally and emphatically, let me stress and let me emphatically state that the Reserve Bank is and will continue to encourage and support innovation and technology in the financial sector. Let there not be any doubt about Reserve Bank's commitment to promote fintechs, to promote innovation, to promote technology in the financial system.
All right. Well, as we speak, as we heard that bite coming in from the Reserve Bank of India governor on Paytm, we had a few results that were flashing for you on the screen. I just want to pull up Page Industries. That's been a stock that's been under some pressure. It's come off the recent peak and the markets were positioned for a weak set of numbers. The numbers on the top line, it's more or less in line. I'm looking at a rough estimate. It was around 1,240 crores that was expected on the top line. And it's come in around that vicinity of around 1,230 approximately. So no big miss on the top line itself. On the margin front, the street was working with a number of close to around 20% approximately. That's the estimate that came in from Bloomberg. And I think the number is in that vicinity. So I think because the markets were net short on the stock, That's the reason why we're seeing a bit of a fillip now as we speak. So it's not that big a miss, and maybe it's in line with some estimates, explains why Page Industries is now spiking up as we speak. Besides Page Industries, we also had Balrampur Chini, and those numbers as well looked fairly okay because there was some mild margin expansion. There was a good top line growth of close to around 25%. So that's the other stock that we're looking at. It did spike up close to around 2% from the low point of the day. Deven, I wanted to ask you your view on Page Industries. Well, the stock has been under some pressure. It was down close to around 3-4% in this year so far, while we've seen a bit of a party in the broader markets, and it's come off its recent peak. These numbers don't look that disappointing, in comparison to the positioning. What's your view on the stock?
So I think the numbers convincing, especially on the EBITDA margin front, where I think the margins have once again started recovering. That is important. Which means the cost pressures, I think, which they have been experiencing in the previous past, I think that probably have come to some kind of they may have arrested, I think, the cost, I think, to a certain extent or to a greater extent. On the other side, I think with the addition of new stores, probably I think the footfall and the business is staged to improve from here on. And along with it, the product mix, which is largely aligned towards, I think, some of the high margin products, which could possibly result into the company coming back onto the track of producing better EBITDA margin than they produced in the previous quarters. So one would be keen to look at, I think, the commentary coming in from the management on these few points, which I am observing. Should that happen, then probably I think that will be a time to, I think, once again relook at this company. Though the valuation-wise, I think everything seems to be in price at this point of time, but still one would like to see the commentary coming up from the management.
Okay, Deven, we leave the conversation here for now. Thank you very much for joining in. As we slip into a short break, we'll turn our attention to something truly exciting and empowering. We're talking about an exclusive opportunity for SMEs out there. We know that they are the backbone of our country's economy, contributing nearly half of our exports and 29% of the GDP. So, to help them navigate the global landscape and enhance their export-import strategies, we're bringing a curated masterclass led by industry experts, a space where you learn from the best, understand the nuances of international trade, and get inspired by success stories. It's more than a masterclass. It's a roadmap to elevate your business to new heights. If you are an SME with aspirations to make a mark globally, hurry up and register.
Welcome back. We were highlighting that the Page Industries numbers actually didn't look as bad as the street feared. On a year-on-year basis, there is some improvement, and it appears that the street has taken it positively. Just to tell our viewers, the last 6 months, it's not participated at all. Though we have seen a big rally in the broader markets, Page Industries, in fact, is down close to around 5% just in the last 6 months. If you pull up a last 6-month chart, you'll see it. And in their press release as well, they're saying that the company has witnessed a 4.6% growth in sales volumes. So that is good. And they're also saying the margins have been achieved closer to around 19% because the impact of investments in digital transformation as well as marketing initiatives, they have been largely balanced by favorable input cost and operational expenses optimization as well. So it appears the street was fearing a weak set of numbers. It's not as bad. Maybe it's in line. And as it is, the stock had underperformed. There were shots in the system which are getting squeezed out. Explains why the stock has moved to the high point of the day. Guys.
Okay, Nigel, absolutely. Yeah, I mean, Page has been going through such a massive underperformance. I mean, the stock is at the lowest levels it has been in the last year and a half. So let's see if this points to some sort of a bottom formation or not. But back to the big story, and that continues to be what we got from the Reserve Bank of India. By the way, the Bank Nifty has fallen some more. So the selling hasn't quite stopped. Just wanted to point that out. We're down about 670 points on the Nifty Bank now. So, you know, it just continues to move lower and lower. Lata is with us. So let's just get some sense on what came out of the policy. Lata, good to have you in the studios. I guess a lot of people went in with the expectation that on liquidity, there'll be some hint of easing coming, if nothing on rates. Or what was your read-through?
Well, first, let me take why the stock market may have reacted so badly. I think the stock market went with the expectation that there will be definitely dovish noises. Either they change the stance or they point to prepare the markets for a change in stance. Some dovish noises was what they expected. The Reserve Bank was as even-handed as it could be. He was not hawkish, but he wasn't dovish either. It was, you know, yes, inflation forecasts have been cut both for the current quarter. Jan, Feb, March, it's been cut from 5.2 to 5. And for the next quarter, April, May, June, also it's cut from 5.2 to 5. But the full year FY24 and FY25 forecasts have not been changed. So, you know, yes, they recognize a bit of a fall in inflation, but I've not included it in their policy making. But I think much more important was that they have not given any indication that they're going to change their stance anytime soon. The other thing that may have spooked the equity markets is that he said at least 3-4 times in the speech that the rate hikes have not been fully transmitted. Now, we are to align ourselves to the 4% inflation, and that's why I'm not changing my stance is old hat. But that all the rate hikes have not been transmitted is something new for the market, and maybe they are reacting to it. My own sense is it was just an excuse to not change the stance. That he was giving 2-3 reasons. The point is he didn't want to change the stance till he had more data and more events. Maybe more Fed events in terms of a rate cut from the Fed, or maybe more in terms of how the monsoon will pan out, because food inflation is the problem. So maybe he wants to wait for the May monsoon forecast from the IMD and then take a call. He's going to be event-driven and data-driven. But instead of putting it that way, he probably said, yes, I will be wedded to ensuring that the rate hikes are passed on. All that I gave should go to the system, and that you should align yourself to the 4% inflation target. Now, no central banker or banker expects that everything that the RBI hikes will be passed on. It doesn't get passed on because there's competition between banks. So they may take a little bit of hit on their margins, but will not pass on. And the governor knows that very well. But I think they don't want to change stance. And so they gave 2 good reasons that came to the mind. And that's what has spooked, in my understanding, the equity markets. Look at all the consumption stocks are down. Because if money is expensive or going to remain expensive, those are the kinds of things that can get a beating. Maybe you've seen NBFC stocks take a beating. You've seen private banks take a beating. My sense is public sector banks didn't take a beating because they are usually better provided in deposits. The CD ratio problem, having more credit and less deposits, is more a private bank problem. It's not so much a public sector bank problem, and that's why you're seeing that set of stocks taking a beating, and they are heavily represented in the Nifty Bank, and you're seeing the reaction. And finally, I think it's very important that he gave, and Ritu explained it very well, in no uncertain terms, he said that, you know, the action on Paytm was commensurate with the behavior of the regulated entity. If it is not in line with the regulations, that's the kind, it's entirely commensurate, and they were not overreacting, and they have no problem with, digital or any innovative systems.
I guess he was matter of fact on liquidity, matter of fact on Paytm as well.
And very well prepared. Absolutely reading out the reasons why. So clearly expecting that, everyone has a Paytm in their phone and they will be brimming with questions. I thought they were very well and adequately answered.
Absolutely. And, took all the questions and answered them very patiently. Lata, thank you very much for that. Shivani Sarkar-Kurian is with us, Senior EVP and Head of Equity at Equity Research at Kotak Mahindra Asset Management Company. Shivani, good afternoon. Good to have you with us here. Is this a one-day disappointment with what the RBI has done, or it's going to stick with us for a while? What's your sense?
So I think, hi Prashant. So if you look at what RBI has done, is pretty much maintained a status quo, both in terms of policy rates as well as their stance. So if you look at the system as such, a couple of things. One is credit growth has been ahead of deposit growth. And therefore, there is a need for deposit growth to catch up from that perspective. So that is something that will possibly continue. And that is what possibly the banking system will have to, look at. So if you look at the overall, the banks and the way their margin profile has moved, there has been a catch up in terms of cost of deposits for most of the banks, which has started to impact margins. Incrementally going forward, we also expect that RBI policy stance would remain at this point in time, given that they are focused on bringing inflation down to 4%, which is their targeted rate. And they would possibly wait for cues from the US Fed before acting. And given that growth continues to remain fairly good where India is concerned, there is no pressing need to change the rate stance at this point in time. So for the banking system, banks which are better placed on deposits, banks which have far more liquidity on their balance sheets would be better placed to handle this current environment until and unless we see a pivot or a rate cut cycle, which would possibly happen sometime later in the year.
Hi, Shivani. Good afternoon. Good to see you. And Shivani, what have you made of this result season? We are almost done and dusted with it. I think you all as well were in the camp who's expecting mid-teen to around 18%, I think 15 to 18% earnings growth. Is it looking on track as of now? See, the problem is that top line growth hasn't been that great, but there have been margin beats. So if raw material costs start spiking up and the top line doesn't grow, then that could be at risk. I wanted your thoughts on the same, or are you satisfied and you think we're on course?
So hi, Nigel. So you've hit the nail on the head. That's how the result season has pretty much progressed, where top line growth has been single digit, mid-single digit, while your margin expansion has resulted in the net profit or the bottom line growing close to 19% for the Nifty companies that have reported numbers so far. So you're right that typically if you look at commodity costs, if commodity costs start to move up from here, the margin impact would start to flow through. The good part, however, is that commodity costs so far have been pretty much under control. Having said that, you do need to see top line growth now starting to pick up, especially in terms of demand. So a few key trends that we have picked up. One is that if you look at the industrials, infrastructure, capex side of the story, those companies which are focused on those segments have done fairly well. The issue has been on the consumption side, where typically we've seen that the top line growth has been muted. The dichotomy between mass consumption and premium continues, which is impacting the overall top line growth. And therefore, that is one segment, especially where mass consumption is concerned, would be a key to watch out for. If you look at estimates for next year, which is FY25, estimates have remained largely intact, which means that so far from an earnings perspective, we are okay and largely on track. If you look at the broader market earnings delivery has also held up so far well, and therefore there have not been any major earnings cuts as such. But I think for us, the key factor to look out for is whether there is any revival on mass consumption from here on.
Shivani, do stay on. We've got a quick conversation that we wanted to present to our viewers. Lupin, now the company reported a good set of Q3 numbers, came in ahead of street expectations, margin the highest in the last 10 quarters at 20%, India growth strong at 13.4%, US sales came in at above $200 million. To talk more about the way forward, my colleague Ekta caught up with the management. Listen in.
We've been working towards this for quite a few years, and finally we see it panning out. You said to focus on the others, but I do think that one of the big changes was the U.S. business staying north of that 200 million and the quality of the products in that market as well. I'll let Vinita add on that part, but I think India is coming into its own. We've been doubling down. We added 1,300 representatives in the last 12 months. In India, we've added 7 divisions, I believe. There's another 2 divisions that we're going to be adding shortly. And the idea is to double down and focus on growth. We've launched, I believe, 21 products in the last 9 months. We've been the #1 company across the sector in new product launches. So it's just good growth as expected in India. In fact, I think we're coming out of a period where growth was slower, and I would expect this double-digit growth to continue. The market, the market goes up and down, but we've always talked about 20-30% growth ahead of the market. That'll continue. Markets like India are doing really well, driven by our inhalation portfolio. So, the first product, Luforbec, that we launched is doing extremely well in pretty much every meaningful country in Europe. And, it's become our biggest product in Europe. Obviously, inhalation across the company has become very large. 25% of total company revenues, 40% of the US, the largest product out of Europe. So, good growth all around. Everything is growing. If you see other markets, everything is growing. South Africa has been growing very nicely. That again is coming out of that lull back to that growth. So we see growth all around. I would still maintain that the big change is the US in terms of maintaining that growth and very high quality of sales in the US.
Well, Nilesh, I have to say, I haven't heard you sound so optimistic. Fun quarter, growth all around. So definitely good to hear you sound so optimistic in terms of numbers after a long time. But you did mention the US sales. Vinita, I'm going to come to the US now. $200 million is what you did this quarter as well, above that level. But it was flat on a Q-on-Q basis. So is there some pressure which is seeping in on a sequential basis in terms of the US business, say when it comes to key drugs such as Spiriva generic, Suprep, where you will probably see additional competition?
Yeah, so as we had guided even in the last quarter, we had expected some normalizing of large product launch like tiotropium, Spiriva. We launched in Q2, so we were expecting, channel normalization as the substitution rate goes up. Very pleased to see the ramp up of prescription share of that product. We are now above 30% share in the last 4 weeks, so it's ramping up very nicely. So no real pressures. I mean, it's really what we expected. So the baseline business, in fact, was extremely strong during the quarter, and the flu season products helped contribute to, offset some of the channel inventory impact of tiotropium from compared to Q2. So it's been a very solid quarter for us, with apart from sustaining the revenue level, improving our profitability, in fact, quarter after quarter.
That's Lupin for you, but look at Zomato's numbers, very, very strong, and the net profit of the company continues to expand. In Q1, the net profit was 2 crore. In Q2, it was 36 crore, and this quarter, the net profit of the company has expanded to 138 crore. The top line too continues to grow at a very robust pace. On a quarter-on-quarter basis, Zomato's revenues are up 15.5%, and on a year-on-year basis, revenues are up close to about 79%. So these are looking good, prima facie. At the EBITDA level also, there is a profit this time that the company has reported, 51 crore, taking its margins to 1.5%. The stock is reacting positively, 4% higher on Zomato. Q3 is also a seasonally strong quarter. You had the, the Cricket World Cup, towards in the month of October, and generally in December, ordering in picks up. So these are strong numbers. Just to repeat, the company has expanded its profitability significantly, 138 crore of a profit this time, which compares with a 36 crore profit on a quarter-on-quarter basis and a 2 crore profit in Q1. And the revenues for the company have increased by 79% year-on-year and even sequentially there is a bump up of 15.5%, and the EBITDA margins for the company are at 1.5%. You know, last time in Q2, there was an EBITDA loss. The EBITDA loss was about 57 crore, but this time the change that's taking place is even at the EBITDA level, the company is turned profitable, and that's helping the company's bottom line. The stock is now at 146. I think the low on Zomato was about 40, 43, somewhere thereabout. Around.
Interesting, right? It listed at a very high, a significant premium. I think hit to about 120, 129-ish kind of levels was the high. Then it had a one-way decline, fell to, as you're saying, 40, 50 bucks. And, this is the second coming in that sense for Zomato.
49 is the 52-week low.
And then this is much more steady. I think Mangalam is with us with, a first sense of what the numbers look like. Mangalam, strong?
Very strong numbers. Year on year, of course, there is a 79% revenue jump, but quarter on quarter, there's a 15% jump as well. This at a time when people are talking about consumption weakness. Importantly, there has been a strong operating leverage play which has come by as well. Yes, there is an EBITDA gain. This has come, that the company has posted X of other income for the first time in its history, and that's led by a big jump in the food business EBITDA. So if you compare the EBITDA of the food business this year versus the same time last year, it's jumped by about 10 times. And that's not all. In the Hyperpure business, the revenues have doubled, so the growth drivers are firing for the company. And at the same time, the losses have halved from close to around 600 crore operating loss to just about 300 crore operating loss. So this paves the way for Blinkit's profitability at some point as well. So what are the things which are doing well for Zomato? Well, the core business, food business, has only gotten better after the inflection point that it hit of EBITDA positivity about a few quarters ago, and that's firing up. The EBITDA over last year in the food business has jumped 10 times, whereas Blinkit is the growth driver for the company. The revenues of Blinkit, or the quick commerce business, has doubled year on year, and at the same time the losses have halved. All these things coming together, and that has resulted in a strong set that has come by.
Oh, absolutely, Mangalam. In fact, I remember the conversation that you guys were having with Mr. Jagannathan of TTK on Bazaar, and I think he put it so beautifully. The patterns in consumption have completely changed. Look at hotel stocks, look at what's happening to a Zomato or a Trent, and then you contrast that with what's happening to some of the durable guys, or, some of the QSRs for that matter.
Are you making a direct comparison of no pressure cookers at home and ordering out?
Perhaps, and not ordering burgers, not ordering pizzas, but ordering more exotic stuff on a platform like Zomato. Since we have Mangalam here, I wonder if we can toss a question on ITC as well. Okay, I think Mangalam's gone back to analyze those numbers. We'll get him back and talk about ITC,
So
but big move there.
I think, and I'm kind of surprised that the reaction is a little muted, right? Maybe stock had run up in anticipation of the numbers, but these numbers from Zomato are strong enough, I think, to warrant, upgrades and, general kind of bullishness from the sell-side community, at least when we come back tomorrow morning. So I think that'll be something to watch out for. 51 crores in EBITDA as compared to a large loss year on year. We'll take a quick commercial break here. Markets, I think Nigel, you want to make a point?
No, I just want to make a quick point. We have the quick commerce business. The numbers are flashing for you on the screen. Just to give you a comparative number, last year it did 300 crores of revenues with an EBIT loss of close to around 200 crores. Now, this time around, those losses have come down by a fourth. It's come down to 56 crores. The EBIT losses, and you have the revenues that have doubled from 300 crores, it's gone to 600 crores. So I think that's where the big delta has come in, with the EBIT losses coming down by close to around a fourth. And you have the revenues that have doubled on a year-on-year basis. Even on a sequential basis, if you compare the losses, the EBIT loss on the quick service business, quick commerce business has come down by around half or so. Just want to put that point out because we have some of those numbers flashing for our viewers on the screen. But as Prashant was going to do, I'm going to do that. We're going to slip into a short break, come back. Nimish is waiting for us on the other side with a quick check in terms of what's going on in Daily Group. Stay with us. Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, Zomato was the big number that hit the screens, and you're wondering why the stock didn't react positively. Well, in terms of Blinkit, the numbers have improved. The EBITDA losses have come down drastically. But some part of the street was expecting maybe, in fact, they could be moving into the green. So that could be one of the points of disappointment out there, and that's why the stock has come off the day's high. But they've given some clarification. They're saying that they're on track to meet their guidance of adjusted EBITDA break-even on or before Q1 FY25. That's on the Blinkit piece. And Nimesh was just telling me, that that's the big trigger for the stock going ahead as well. From big losses, they're cutting it down, but the street wants that to move into the greens. And since Nimesh is with us, Nimesh, tell us, what are you picking up in terms of flows? A down day for us today.
Well, a down day for us, and the fact is we are very close to that very crucial support of 21,690 on the Nifty. If that gets taken out, Nigel, the sense I'm getting is you'll see a sharp sell-off, so that's something to track. But I guess today's weakness has also been attributed to a basket selling. I understand there's a basket selling at a leading FI desk, largely Nifty names. So if you look at today's market, it's largely driven by the large Nifty stocks, which is pulling the Nifty down. So looks like that's because of the basket selling as well. Again, what's surprising me is that the private banks are under huge pressure. The RBI policy was the status quo, no big surprise there. Even the NBFC is under pressure today, because I was reading a note and it says that there was no measures been taken to improve the liquidity deficit. So that explains a bit of weakness in the NBFC names. But clearly no specific reason for the private banks to fall so much in today's market. But again, we've been saying this for weeks after weeks. It's the PSU rally.
Yes.
That's been the big leader in this market. And again, today's market, you've seen big rally in the PSU stocks today. So the insurance names are buzzing in trade. The PSU bank stocks are pretty much on fire. So the PSU basket continues to outperform. Of course, there is a bit of churn is happening there as well. I've been saying this, that for now, there is some bit of profit booking as well and a bit of churn as well within the PSU stocks. But broadly, today's weakness in the broader market, especially in the Nifty, is largely Nifty driven, and that's because of the basket selling.
All right, Nimesh, what about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock in my list today is IEX. The stock was down 6% in yesterday's trade. But I understand for the last couple of days, despite the regulatory headwinds, there is a bit of contra buying happening. So again, in today's trade, expect high volumes. But I guess there are buyers as well at this price in IEX from larger institutions. So that's the first name. The second stock is JP Power. It's come to my list after a very, very long time. We don't talk too much about this stock, but for the first time, there are first signs of some institutional interest as well in this particular stock. The stock entirely has recovered from the day's low and good volumes as well. In fact, this year, in the last 2 months itself, the stock is up more than 50%. So that's JP Power. And the last one is Inox Wind. The stock is buzzing. Of course, there has been a lot of order wins for the company. They reported a large order win of 1,500 crores. But the sense is there are few large more orders expected by the company, and that's the reason why Inox Wind is buzzing in trade today.
Now Zomato's back in the green, up 1%. Nimesh, thank you very much for that. Let's get to Ashish Kyal now. We've got 9 minutes left to wrap out this day. Ashish, what would your BTST calls be?
I will be looking for buying in the defensive space. So the first one is going to be Menken Pharma. We can clearly see that the stock is bucking the trend and is on the upside. Formed a decent enough rounding bottom kind of a pattern and breaking out. So Menken Pharma can be a good bet. We can expect it to move towards the level of 2,400. And on the downside, one can maintain a stop loss of 2160 levels. And the other one on the buy side is going to be Eris Life Science. We can clearly see it is breaking above the very important hurdle, which was around 937, 930, and managing to sustain that. So the overall trend for Eris Life Science is positive. We can expect a move towards the level of around 970 on the upside, and one can maintain a stop loss of 920 on the downside.
Okay, all right, Ashish, thanks a lot for giving us that take on the Nifty as well as individual stocks as well. By the way, you have a bit of a battle that's underway, and the Nifty has recovered considerably from the low point of the day, because L&T, you pull up the intraday chart out there, that's cut its losses by nearly half, and Reliance Industries, that big boy in there, that's putting in a good fight for the bulls, and that's why we have that recovery of around 50-60 points. The problem for the Nifty is that HDFC Bank is the one that's moved back to around 1400 odd, and that continues to see selling pressure, and that's what's preventing the Nifty Bank from moving higher. So you just pull up some of these intraday charts, it'll tell you the picture in terms of why the Nifty cannot recover, because HDFC Bank. Prashant?
No, absolutely. I mean, I think, but, still down almost 200 points, but holding a little bit off the day's lowest level. Let's talk about insurance, right? We were talking about LIC, we were talking about GIC, we were talking about names like New India Assurance. These were stocks which nobody wanted to buy 2 years back. But they've all, in the last, from the lows of, actually, it's not even 2 years, You go back and look at the prices in December of 2022, which is just 1 year, maybe a month or so, prices have gone up 2-3 times, especially stocks like GIC, RE. What's happening here? Let's put this in perspective. Yash is here with some numbers. Yash, over to you.
Well, Prashant, exactly as you pointed out a year ago, nobody wanted to look at these stocks, and now everybody seems to be talking about them. And it's also the vote of confidence which came from the Prime Minister himself as far as LIC is concerned. That life insurance giant has added about 3.5 lakh crore in market capitalization. And that just in the last 3 months. With that, it's crossed a market cap of nearly 7.23 lakh crore to become the 5th most valuable company in the country. But it's not just LIC. There are 2 more PSU insurance companies which have shown, better performance as compared to LIC in that sense. The first one is GICRE and the second one is New India Assurance. Look at something like GICRE. That company has added nearly 43,000 crore in market cap in the last 3 months. It's crossed a total market cap of about 82,000 crore. Again, an all-time high for the company. New India Assurance, that company has added about 30,000 crore market cap in the last 3 months, crossed about 52,000 crore in market cap. But one very important thing which needs to be looked at as far as these companies are concerned is the low float as far as their government holding is concerned. LIC government holds about 97.5%, public float of 3.5%, GICRE public float of just about 5%, LIC holding 9%, government holding 86%, New India Assurance public float of just 5%, government holding 85%, and GICRE with 1% and LIC 9%.
Okay, thank you very much for that interesting data there. We will slip into a very short break. We'll come back with more on the market.
Welcome back. Okay, time to close out what's been a weak day for the street. The Bank Nifty, by the way, had dipped below the 45,000 mark. It's now in the dying moments, trying to sort of have a close above that at least, but still it's a cut of over 700 points. And the Nifty itself is down close to 180 thereabouts. So where was the weakness? The weakest stock on the Nifty is ITC today, with fears about some selling coming in from one of its key shareholders, British American Tobacco, 4% down there. And then let's round up the banks. Kotak Mahindra Bank, 3.5%. ICICI Bank, about 3%. IndusInd Bank, down 2%. Weakness pretty much across the board, not just on banks, but even non-banks. Look at a stock like Bajaj Finance, for instance, about 2% lower over there. And some of the private sector insurers were cooling off after yesterday's rally, HDFC Life being case in point. Then we talk about some of the consumer stocks, at least on the Nifty, the color was red. So Britannia down 3%, Nestle down about 3%. Those were the weak names. But again, speaking of consumption, we've been talking about Zomato. That was the outlier with a gain coming in. What worked for the Nifty was Reliance, a 1% up move, but not enough to wipe out the red. And some buying in large cap technology, TCS and HCL Tech being some examples over there as well.
No, no, absolutely. And, these are large movers that we had today. I want to just mention the insurers, right? I mean, as you were saying, LIC, GIC, New India Assurance, these were the top gainers. The defense names came through with some gains today, HAL and Bharat Dynamics. And then, of course, continuation in names like Trent, which had another 6-7% gain. There was Kalyan Jewelers, which was up sharply. Pradeep Phosphate was another one, which was up and about in a trade today. So more down than up, and advanced decline, actually about 2:1. Not nearly 2:1, but close to it is what we had. So 170 lower off the day's low, but sharply down day. So wrap up this edition of Closing Bell. From all of us here, goodbye. Thanks for watching. Markets Forward coming up next.